There is an ongoing race to the bottom of fees amongst ETF and index fund providers in the UK, and customers saying no more to portfolio destroying and often hidden fees.
The latest platform to deliver sweeping changes to fees is Vanguard, some of the best and lowest cost trackers available to investors.
This is fantastic news for UK investors for two reasons. Number one, the sweet Vanguard funds are now far more likely to perform better over a lifetime without those fees dragging down their performance. And number two, this will surely have a knock-on effect for the whole industry. Other providers won't take this lying down and will want to reduce their fees in order to compete with Vanguard.
What does this mean for your portfolio and investing strategy? And what's likely to come down the line next? Let's check it out.
Welcome to MoneyUnshackled.com, the investing and finance channel that sets you and your finances free. This is Andy, I'm Ben, and if you like what we have to say, hit the like button and click subscribe.
Also, now at MoneyUnshackled.com, we are proud to bring you a downloadable 4-step guide to stock market investing. It's totally free to download and tells you everything you need to know to get started investing in stocks and funds, including how to best avoid those pesky fees. The link to MoneyUnshackled.com is in the description below, so be sure to download your free copy. Now, let's get into the video.
What's happening in the UK investment markets? Following the example set by Robinhood in the US, platforms in the UK are popping up that offer truly free trading on stocks and ETFs. For the newbies, ETFs are exchange-traded funds built up of all the stocks on an index, our favourite stock market vehicle.
Trading212 and Freetrade are two platforms offering this service, which charge you no fees in exchange for a reduced number of ETFs and shares that are available. Just the big hitters? This trade-off of availability and fees has proven very popular.
Because customers are free to open accounts across multiple platforms, we can take advantage of buying big name stocks like GE and big name ETFs like the iShares FTSE 100 on a basic zero fee platform, while using a more comprehensive and wide-ranging platform like AJ Bell for buying more interesting and exotic shares, funds and commodities. In the US, the major platforms have recently followed suit by offering free trading to compete with the likes of Robinhood. And we would expect a similar thing to happen in the UK further down the line. This is great news for UK investors.
Fund fees. What we just talked about was the action being taken by the platform to cut the fees that they charge you themselves, being trading and operating fees, the costs of buying and holding, and selling. But there is another major fee lurking within the products you buy when you buy funds and ETFs. This is the management fee or ongoing charge.
Buyers of ETFs and funds will be inadvertently paying these ongoing charge fees, even on zero-fee platforms, as they are built into the products you buy by the third-party fund provider, such as Vanguard or iShares.
What is Vanguard and what have they done? Vanguard are two things: a provider of great index funds first and foremost, and more recently an investment platform in its own right. What Vanguard have done is start to address the problem of high ongoing charges fees within ETFs and funds by slashing them on many of their own products.
The cheapest Vanguard index fund now only charges a 0.06% ongoing charges fee, the FTSE 100 UK All Share Index Fund, a key UK index fund that we should all consider investing in. To visualise that fee, if you invested £1,000 into this Vanguard index fund, you would pay only 60 pence a year in fees, about a penny a week. So a quick rummage down the back of your sofa every so often should foot the cost of being invested in 98% of the market cap of the UK stock market. How lucky are we to live in a time when financial freedom is available so readily to anyone who wants it?
Fee war. Vanguard index funds now have an average fee of just 0.15% and their ETFs have an average of 0.1%. The cut is part of an ongoing race among index fund and ETF providers to offer investment products with the lowest possible fees.
The cheaper the fund fee, from Vanguard's point of view, this is more likely to attract more investors and therefore the more assets under management.
With increased size, it will benefit from economies of scale. It is this reason why many of the cheapest index funds and ETFs are also amongst the largest.
In the US, this ongoing fee war has even resulted in some providers providing funds with zero ongoing charges fees. In one case, an introductory negative fee, meaning investors were paid to invest. So why is this so significant? With the zero-fee platforms Trading212 and Freetrade offering zero trading and holding fees, and now the reduced ongoing charges action taken by Vanguard, the fee war has started to spread to the shores of the UK in a way that surely signals greater things to come.
We think that platforms and fund providers are going to have to keep finding new and innovative ways to reduce fees, as investors are becoming more aware of the destructive effect of fees on a portfolio over the long term. The developments discussed here are just the opening shots in a war on fees where the customer will come out the winner.
I don't use the Vanguard platform. Will I benefit? Cutting fees on ETFs and index funds means that the built-in fund fees across all platforms are smaller, zero-fee apps included. The reduction in a funds fee is to your benefit no matter what platform you use to buy it. Note that these built-in product fees were always there, even on the zero-fee platforms, because these are not in the power of the zero-fee platforms to remove. The platforms themselves really are zero-fee, but it is the ETFs that they sell on those platforms from third-party providers like iShares and Vanguard that have these product fees built in. It's like saying it's free to shop at Tesco. There's no charge for entering the building and you don't need to tip the cashier, but the branded loaf of Hovis bread you bought there has built-in costs that Tesco can't control.
If you're buying Vanguard funds on any platform, these built-in product costs are now smaller, no matter what platform or shop you're buying it from.
Why we care so much about fees? Fees are boring, mind-numbingly so, and yet they are one of the 3 top killers of portfolios over an investor's lifetime, the other 2 being inflation and taxes. There's nothing you can do about inflation, and taxes can be more or less ignored if you do your investing through a stocks and shares ISA. But fees can either be tiny or a massive destroyer of wealth depending on the choices you make. Any chance you get to reduce your fees could be the difference between retiring at 50 or retiring at 70. Between a £1 million pot and a £500,000 pot. The difference between investment goals fulfilled or a disappointing end to a multi-decade project.
Being around at a time when fees are being identified as the last great enemy of portfolio health is fantastic for you, because you can invest now knowing that fees are a danger, but something that will likely become less and less of an issue as your investment retirement horizon approaches. Your portfolio will be able to develop over the years unhindered by massive fees. It will be easier than ever before to become financially free.
Question of the day. Fees are slowly but surely getting sorted. Is this now the push you need to get into investing? Let us know in the comments below.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.